Hello, everybody. In the latest June 2020 issue of the Reserve Bank of India Bulletin, there is an article titled Estimates of Household Financial Assets and Liabilities. According to that article, both financial assets and liabilities of households remain bank centric, with some shifts in favor of mutual funds and insurance in more recent quarters. Not very significant. In India, the household sector contributes 60% of the gross savings and thus remains a major supplier of financial resources to the economy. At 52.6% of the commercial bank deposits being the target for household financial assets, what is important for the economy and the household sector is that the banks are in good shape because these deposits are converted into assets, and it is the responsibility of the banks as fiduciary agents of the depositors to maintain the quality of assets. If the advances and the credit portfolio are safe, then the deposits are safe. If there are any adverse or negative movements in the asset portfolio, they become non-performing assets, then it signifies a weak banking system. So we take the latest trend and progress in banking report of the Reserve Bank of India and see how the NPA figures are. Opening balance of the NPA figures for 2018-19, 10,38,684 crores. Closing balance 9,36,474 crores. So there has been a reduction. But this reduction is largely on account of 2,36,948 being written off. By writing off, the banks may say that this is a technical write-off. It helps them because the loan portfolio becomes cleaner. It helps them because they get a tax break on the losses incurred. It helps them because there is more realistic quality assessment. But our submission is that any bank write-off is detrimental to the taxpayer because it is tax revenue lost. So the burden shifts to the taxpayer because government's fiscal deficit has to be met by the taxpayer. It also possibly hurts the depositor because there are increased costs of non-performing assets. And these add to the operational costs. And there is financial repression in the interest rates of the depositor. So our submission is that customers must be wary of banks where they must be cautious, must be careful. An example of how banks may go wrong is the indebtedness of Reliance Communication, where 38 lending banks of Reliance Communication Limited had claims of 49,000 crores. Insolvency resolution plan for that organization says that the lenders might get just about 23,000 crores. That's a haircut of 53%. What's a haircut? It's a technical term used. Is the difference between the asset value as on books and the current market value. That means that there is a technical write-off or actual loss to the banks involved. Our submission is that when profits are made, The corporates took them all. When losses are made, the taxpayer and the depositor, through financial interest rate repression, has to pay the price. That is unfair to the public at large. Therefore, customers of banks, the norm is buyer beware or caveat emptor. Depositors, be aware. Thank you.